Hey guys, welcome back to this video. This is Sean here from Crypto XL, a company based in Canary Islands to train investors and traders to become profitable in the crypto market. Today in this YouTube video, we're basically going to be talking about manipulation. This is going to be the main topic. We're going to be discussing what is manipulation, how to spot them in the market, and why does this happen? Why is there such a thing called manipulation in the market? So let's get started. Before we get started, by the way, we go into this much more detail in our smart money course. We get into much more details how to spot this and how to use this towards your advantage. So let's get started. So what is manipulation? So manipulation basically happens because price needs liquidity. All right. So why does this happen is because basically what the banks usually do is that they move the price to grab retail stop losses before moving in the given direction. What do I mean by that? As we all know, and I've taught this so many times and talk about this so many times, liquidity is what moves the market. Just write this is what moves the market. Price always move from liquidity to liquidity. It always moves from internal to external liquidity. That's what moves the market. Liquidity is king in the financial markets. So in order for the banks to make money, they have to grab your stop losses. By your stop losses, I mean retail stop losses. Obviously, keep in mind, retail is just not retail traders. There are many retail banks as well, placing millions of dollars worth of money in trades. So those are all stop losses that the smart money wants to take because that's how they make money. So what do I mean by manipulation? All right. So let's take a look at some few examples of bearish and bullish example before looking at some real examples all the way down here. So this is what a manipulation will usually look like. So basically, let's look at a bearish example. So we have price ranging, all right? And price ranges, as we all know, it's creating liquidity on both sides, right? There's resistance right over here. There are many retail stop losses is right above here, and there's support right below here. Let me just change this color to red. All right. So there's resistance and there's support. So right above all of this resistance, there's stop losses. These are all stop losses, and right below the support, there's a lot of stop losses. So the banks need to grab your stop losses. That's how they make money. So what price usually do is that the banks usually push price towards the upside, grabbing all of these stop losses before moving in the given direction. All right. And let's take a look. And this is a bearish example. Let me just write it over here. Bearish. Let's take a look at a bullish example. Let's take a look at a bullish example. So we have price ranging and then price moving down before grabbing all of these retail stop losses right below support before moving towards the upside, grabbing all of these stop losses as well, and then continuing towards the upside. Now, many retail traders would be wondering, because keep in mind, all right, retail buyers, it's not wrong. They are right. They are bullish. You might be right, but it's how they get in and where they look to get in. That's what differentiates them between, I mean, retail concepts and smart money concepts. All right. So keep in mind, like, let's say, and just looking at this example, where we look to get in is obviously right below all of this liquidity. Maybe you find a demand zone right away, and that is where we are right. All right. And keep in mind, as I mentioned, the buyers are still right. The buyers are still right. They are bullish. They are looking to buy definitely because they know the trend is bullish. They want to be buying, and that's the right thing to do. Maybe they get in over here, stop losses right over here, take profit at maybe 1 to 2 or the info. But keep in mind, their stop losses get hit all the time before moving towards the upside. And they keep wondering why is this happening? It's because of this liquidity. Price have to move towards liquidity, grab all of this liquidity before moving towards the upside. Now, this is one example where you have price ranging, grabbing the liquidity before moving towards the downside, price ranging again, grab the liquidity before moving towards the upside. Another example would be this. Let's just move here. So let's say, let's look at a bearish example, for example. So you have price creating higher highs, sorry, lower lows and lower highs. and then you see this happening. So as we know, in a bearish order flow or a bearish structure market, you want price to be maintaining below these lows, below the previous lower highs, sorry. But sometimes you see price doing this and then moving towards the downside. So many people will think this is a break of structure, then they're going to start looking for buys in this, demand to take price towards the upside, and what happens? You get stopped up. And this is also because of manipulation. Price needs liquidity to move. When price is doing this, they're just grabbing liquidity below these lows, and that's just one side of the market. Price needs more fuel. Basically, liquidity is fuel for the market. So what price does is move up, grab the liquidity right above this high, and move down towards the downside. So this is still right. This doesn't invalidate anything. Most of the times, we and members, we look to cash trades from here. Literally, even though this is a break of structure, for us it's not, because we know it's an inducement, and we call this inducement basically. So how we spot this, we usually get into much more detail in the smart money course. So in this, I'm just going to be as general as possible. So this is another reason of manipulation, just breaking structure towards the upside, grabbing this highs liquidity before moving towards the downside. And obviously in here, before confirming anything, we look before just randomly taking a buy trade from this demand zone, we don't do that, because we look to confirm with the price action on a lower time frame, looking for something like this. Here's the downside. And now let's take a look at a bullish example of this. You look something like this. So you have price creating higher highs and higher lows, and then price does something like this, and then move towards the upside. Same thing, does not invalidate our bullish bias. This is just a manipulation of this low being used as liquidity right over here. Just tap into this demand zone, looking for your confirmation, taking price towards the upside. So this is some of the examples that you have to remember. Let me just remove all of this again. So make sure you remember all of these patterns, because it's really important. Let me just put this, and these patterns happens in this as well. It happens a lot. You should remember all of these patterns. Now let's take a look at some examples of how can we spot this in the market. All right. By the way, this was a beautiful trade that we caught with members. We caught price all the way towards the downside last week. And depending on where the video is out, but when I'm recording this video is literally this week, but I'm sure the video will be out by next week. So this was a great trade. We caught all the way down towards the downside, literally right over here, because right over here price stopped because it's a high time frame demand zone being indicated, but we caught the sell all the way towards the downside. It was amazing. Now let's take a look at some example I've marked out. All right, let's take a look at this one first. As you can see, this is the example that I showed over here. Let me just not a good example. Let me just perfect. So this is literally this example. So as I said, just remember all of these things remember the drums that I taught, right? So you have price creating lower lows and lower highs, and right over here, as you can see, so this lower high should be protected, right? What price does is comes up, manipulate this high and all of this liquidity before moving towards the downside. This is type of manipulation as well. And keep in mind, why is this happening? You have to ask yourself the question. I don't want to get into much detail because this is taught in a smart money course, but keep in mind there is a lot of liquidity right away. As you can see, this on a lower time frame, if you just mark this out right over here, this is literally a ranging price action on the 1 minute time frame. You can see this, and there's a lot of highs here. As you can see, these are all equal highs on a lower time frame. That gets manipulated. Same thing right over here as well. We have structure being broken right over here. Price created equal highs, manipulated that equal highs before moving towards the downside. It happens. And remember, equal highs, retail traders are looking at that as resistance. So many people are placing stop losses right above these highs. And what happens? You get stopped out before moving to the given direction. Even though they're right, they are selling it. They are selling it, but still they get stopped out before moving in the favor. And then they keep asking why? Why is this happening? This is the reason. Liquidity. Let's take a look at more examples. So as you can see, we've been bullish right over here. Price created a nice higher low, sorry, for moving towards the upside. And what happens? Price came down, manipulated that low right over here before moving towards the upside. Same thing again right over here. As you can see, we have high, you have literally beautiful equal highs. You get manipulated by this wick before moving towards the downside. Instead of price just continuing towards the downside. This is all manipulation. This is an example of the first thing that I taught, ranging price action, trade liquidity, grab the liquidity before breaking structure towards the upside and continue. Same reason right over here, resistance, as you can see, with this high, almost 4 touches. And keep in mind, even though these are not really straight right to the pip, resistance is a zone. Many retail traders are looking at this as a zone. They're not looking at it as a line, you know. So what happens? You can see right over here, price came, push up strongly, grabbing all of this liquidity before moving towards the upside. And keep in mind, this is not just one thing retail traders are looking at. I don't know how retail traders look at this, but this is probably a trend line liquidity all the way from up here. There's also a resistance area right over here and whatever. So price just pushed strongly towards the upside, grabbing all of this liquidity before moving towards the downside. Let's take a look at a few more examples. Right over here, we have a bunch of it. And see, we have support, literally support. Price move down, grab all of this liquidity before moving towards the upside. I'm going to be faster a bit. This again is the first ever example that we see. Price getting lower lows and lower highs. This high was used as a liquidity, grabbing all of this liquidity right over here with this entire price action before moving towards the downside. Let's take a look at a few more examples. The same thing right over here, equal highs, manipulation before moving towards the downside. As you can see, equal lows right over here. This is a bullish example. Grab that equal lows before moving towards the upside. And the last example, third example, this is the same thing, price creating this, manipulate before moving towards the upside. As you can see, this one, as you can see, all these lower lows, lower highs, and price created a new lower high and a new lower low, manipulated that lower high before moving towards the upside. And the last two examples, equal lows, manipulation for moving towards the upside. Trendline liquidity, what happens? Price came back, manipulated, grab all of this liquidity before moving towards the downside, before moving towards the downside. But keep in mind, right over here, the reason why price did this instead of just continuing towards the downside is because there's a lot of liquidity right over here. Price has to grab all of this liquidity before continuing towards the downside or to the upside, because liquidity is what fuels the market. Wherever there's liquidity, price is going to move towards the downside. Before moving forward, I just saw another example. As you can see, we have been bullish. What price did? Grab all of this liquidity right below these lows. Because keep in mind, even though, let me just remove all of this. This does not look like that much, you know, this is on a 15-minute time frame. This area right over here on a 1-minute time frame, it's literally a support. It is something like, you have a zone, support zone, price is doing this. So there's a lot of liquidity right over here. A lot of stop losses are being rested. And what happens? Price grab the liquidity before moving towards the upside. And I'm not going to talk about this in details, how to spot this, how to use this to our advantage, because it's all taught in the smart money course. Now, we do get into much detail in this in the smart money course. So if you guys want to check that out, you guys can check it out. Or if you guys want to follow my analysis that I send on Discord, I send trade signals analysis every single day on our Discord channels, and members are literally catching all of those trades with me. You can check out Discord. You can just text us on Instagram. We'll guide you. Now, that is it for this video. Hope you guys enjoyed it. And if you make sure to watch this video more than once, because this is all great information that you guys can really use in your trading, and try to spot this in market, backtest these concepts every single day and work hard, and you guys will make it. Thank you guys for watching. I'll see you guys on the next one.